Shannon, I think financials and energy are two of your favorite groups that you think are going to be leading this market. So on a day like today, where they're among the hardest hit, are you a buyer?
So I'm not surprised necessarily that we're seeing a pullback. We certainly like financials better than energy, but I do think that energy is going to continue to perform pretty well. And I don't disagree at all with what Mike said. We think that this reflationary rebound is for real. But if you look at the last 3 or 4 weeks, it does seem like some of it's been pulled forward based on expectations of a really sharp and probably much better than expected rebound in GDP, coupled with this, infrastructure package. And, I think part of this is that, if you look at some of the announcements about this infrastructure package and how it's going to be paid for, I think there is a little bit of hesitancy given the fact that it's going to be offset by some pretty meaningful tax increases. And so, is it a little bit too much, too fast? Perhaps. Are we looking at potentially a rebalance into the end of the quarter? The other thing to look at is that, there's opportunities here, certainly with rates pulling back for those, investors who maybe haven't made a play in financials yet. There's a number of really strong banks out there that you can pick up in your portfolio. And on days like today, it might be a nice way to add to those financials positions ahead of, what could be a really nice next few months for those stocks.
Let's talk about more of the backdrop. Federal Reserve Chair Powell and Treasury Secretary Janet Yellen made their first joint appearance on Capitol Hill today. They testified about the current state of the economy. Powell weighed in on how the Fed does plan to respond in the event of rising inflation. Listen.
Our most basic tools are here to try to achieve price stability, and those principally are interest rates and moving interest rates up and down. As I mentioned a few minutes ago, though, our best expectation is that there'll be modest upward pressure on prices this year, but that they won't be particularly large or persistent into the future. But we do have those tools, and we'll use them.
Does the market buy that, Shannon? Modest increase in inflation that won't be lasting?
I don't know the market buys it, but I think from an economic perspective, you should be buying it, right? I mean, this is clearly going to be a transitory period of inflation over the next couple of months, just based on year-over-year comps from where we were last year to where we are today. If you're looking at things like commodity inflation, particularly in areas like lumber, if you think about where the commodity supercycle burst in 2005 and 2006, some of these stocks are really looking ahead to expect a similar supercycle to be building. And I don't necessarily see that. And so if you think about inflation being transitory, if you think about the basket that the Fed actually looks at, I think you need to look past the next 3 or 4 quarters out into 2022 to really get a gauge on when you think the Fed will be less accommodative. I don't think they want to move too early. We saw the ECB do that in 2011, and I think they're going to be very hesitant about doing it here.
Shepard Smith here. Thanks for watching CNBC on YouTube.